Okay. So, for those of you that might be new to the session, what we do in these backtest sessions is we backtest concepts here within Kingline. So, any concepts that have been taught here in the trading model section, I just like to put them together, make a model out of thin air, and then backtest it accordingly. And so everything that we've done in this specific model, this is called the Kingline Q3 root candle model. We together as a group all met, and we, as well as what's his name, Super Trader Sam as well. Okay, so I apologize. Every single concept that is taught here in the trading model section, I like to backtest those concepts together. We put this entire model together as a group. So whoever showed up to this backtest session this day on October 14th, 2024, we said, okay, you know, how early would you guys take a trade? How late would you take a trade? We've studied Q3 inversions before. We're now adding the root candles to it. We're applying some of the old rules. We also made up some new rules together. And, you know, this is how this model came about. So I want to clarify that the process of this whole backtesting, you know, as a group, the whole process is to literally help you guys with your own processes, right? So it's not to backtest JD's specific Q3 model. It's not specific to root candles. It's not specific to the risk management or any of that. It's to walk you through the process of, okay, if I wanted to put a model together for myself, if I wanted to refine that data, how would I go about that? How would I know to add? How would I know to subtract? And so we go through this process multiple times. So again, I've done multiple Q3 backtests as a group. You know, last year we backtested Q3 root candles. We did multiple refinements to that model, and then in October we decided to start a whole new backtest, adding the root candles in. I'm going to bring this model as far as I can until Q2, and then in Q2 I plan on switching over to Adrian's model coupled with Cozy's calendar, again keeping it true to my theme of just combining concepts within Kingline. Yeah, hardcore gamer, it is on. You have to join. You're not in the actual. Okay. So I plan on backtesting Adrian's model with Cozy's calendar. Again, just combining different concepts that were presented here within Kingline, and then whoever shows up that day, we will make our rule set and together, right? Because how do you know to add a rule? Well, you don't know to add it until you've tested it, but you can say like, oh, I've seen this happen, right? Or it feels like, is what people tend to say. Or I don't really like to do this when this is there. That is somewhere to start, right? You think you have this idea, we just write it down, and then we test it. And if that rule works out, the data will be aligned with that. And if it doesn't work out, it won't be aligned, and we know to remove that rule. Okay, so again, this is all about the process. If you want to learn how to trade the Q3 exactly the way JD trades it, my biggest suggestion would be to actually watch the live streams with JD. It is a combination of making money and learning at the same time, because you can simply, you know, take the trades that he's taking, but applying your own risk management or comfort to that trade, right? So if you're trading an eval, for example, and he's trading a funded account, you can risk X amount based on how much you want to make in your eval. If he's trading in the eval and you're trading a funded account, you can decide to risk accordingly based on how much you want to make in your funded account. So that's, you know, that's going to be the best way to learn from him directly, exactly the way he trades it. And for the record, I've stated this multiple times, but JD is hands down the best live streamer I've seen And this is with watching so many live streamers throughout, I don't know, 2.5 years now on Twitter. So I used to watch a lot of people live stream. I'm in a ton of Discords. I've never seen anyone with JD's consistency. So with that being said, we will hop right into the session now and into the data. Thought that would jump us in. Thank you, PG3. Confirmation bias is always welcomed. But yeah, he is, I mean, he's definitely, like, no joke. He's one of the best. Alright, so we already got through Friday. One of the most recent rules we've added is that we're using TMSO as premium and discount. That has luckily been able to get us through price action significantly quicker. Hold on a second. Okay, yeah, we're not trading the PM session. I'll go to the next day opening. Let me delete everything. And I have checked on FX replay. There are no indicators that give us the information that we need that are similar to the indicators that we already use. Uh-oh. I went too far back. Monday. Just go to 9:50 or 9:45 actually. Okay. So I have to draw all this manually because the indicators are not on this page or on this they're not on FX replay. They're not on this platform. So bear with me. We have 923 Q2, 945 Q3, 1008 Q4, 1030 Q1, 1053 Q2, 1108 I think. No, 11:15. Yes, 11. Oh, what did I do to it? 11:15 Q3. What is going on? 11:15 Q3, 11:38 Q4, and then again 12. So we trade quarterly cycles. Each quarter or each cycle is 90 minutes. Within that 90 minutes, each quarter is 22.5 minutes. It is different from 90-minute cycles. We're basically trading each cycle, each 90-minute cycle again is broken down into 40 minutes or 22.5 minutes. I apologize. All right, so now we need to mark up TMSO, which is the open of Q2. And I'll just draw that through until the next cycle. Then I will go back and mark up midnight. We'll mark up 312. And we'll mark up New York Open. I don't think I have a template for this yet. Oh, I do. Okay. Alright, so, oops. Darn. So the first rule is that we have to play price action or we're not taking a trade until 9:53 prints. If you don't know what time the candle is, it's down here. So we're on 48. Okay, so 9:53 open is now here. And again, we're using TMSO as premium and discount, so in this instance, we're only looking for longs. We have not yet implemented 5 and 15 minute PD arrays. We also have not yet implemented bias. So we have our first inversion here. The whole idea is to keep models wicked simple, and if they are simple, it makes it easy to execute for anyone to execute. If they are profitable without changing anything or in their most simplified form, there's no need to add, in my opinion. So we are aiming for the very first time-based level or root candle, whichever comes first, above 1R. So this is a 2R trade. I selected this stop loss or this swing low as the stop loss simply because it's the closest swing low to the actual inversion. Next candle would get us in. We have entered and we are breaking even at 1R. So we would already be break even here. If you are trading multiple contracts, which is the assumption, then you will also take a partial. Profit. Boom. That is just sick. Okay. Let's document this trade. So how I do this is a combination. I'm just gonna play out the next candle as well. Okay. There we go. All right. So how we do this as well is that because I'm doing it on market replay, you guys are all getting the simulation as with live markets, right? But if before I document the trade, to collect data on it, I'm also going back through the rule set in my mind to make sure that I follow the rules mechanically, right? Because that's the whole thing about data, is that it's not true data if you just willy-nilly change the rules and form fit as you're backtesting. So I go through the market replay again just for the simulation of it, and just so you know, people can see like how you would trade this live if you were to trade this live. And then also again, like I'm just to make sure that I'm doing my best for data collection, I will go through again just to double check that I did all that. So walking you through every step, I know it's very tedious and maybe annoying on your end as a listener, but it's very, very useful for the muscle memory and things like that. And just to confirm that, you know, I'm doing this all mechanically. Okay, so this was November 18th, Monday. Yeah, that was an amazing trade. And this would be the week before Thanksgiving. So we're finally out of the weeds with election. So I'm putting NA as the for the root candle, simply because the root candle was not nested directly with the inversion that we took. And this was during Q3. It's beautiful. We went long. Our stop loss was 18 points for 37 3/4. Our entry was at 10 a.m. on the dot. And our exit was at 10:02. Holy smokes. Now with a model like this, you do have to be prepared to close, or the way I specifically trade is with limit orders. That's also how I backtest, under the premise that I'm going to be using limit orders. So you just got to be disciplined about moving your stop loss at 1R. Oops. Okay. So target was New York Open. This is the link to the chart. I'm just going to note here that this was an A+ setup. Why was this an A+ setup? this was an A plus setup because both the inversion and the sweep of liquidity all happened within Q3, and TMSO was at like pretty much near discount, right? So it's nowhere within our reach to like possibly get in the way. So this was just so wicked clean. All right, and now we just keep playing price through. We can take as many opportunities until we get to late Q4, which we've defined as the last 11 minutes. So after 11 or 10:19, we can no longer take a trade. So if we happen to get a sweep of liquidity here, because we've taken out this high, and then we get another inversion above TMSO, we can take a short. All right, so see, we have a short here. We have another rule that states we cannot take the trade if TMSO is before the target. So in this instance, I would actually not take this trade technically. I could be wrong. Let's just wait to see what happens. Okay, so that's why, because TMSO does stuff like this. All right, and now we are at 10:19. We'll no longer take a trade here. All right, for those of you that may be new to the model, does that make sense? Are you guys all tracking how that was a successful trade and how you could have taken that? We have 10:34 here. And we don't take a trade until late Q2. Let me box out the candles as well. Don't worry, Cozy. You don't have to feel the need to talk just because no one is. It's all good. I will talk to myself gladly. It's okay. I appreciate it though. Open TMSO. It's okay. A little tricky. So we do have this inversion here. This is what I kind of want to see when we have like, because we're using that's a good question. So I kind of went into this model. Sorry, the question is, would holding a runner on an A plus model or setup after a normal TP could be a thing and just run the stop up to where we would have closed? This absolutely could be a thing. One, if you have the discipline to hold and it's not going to drive you crazy or put you on tilt, right? So for you, Cozy, obviously no problem. For me, no problem. I think that most of us are targeting next day payouts, or we're trying to target next day payouts. Is my goal to turn every purple name in the Discord gold. And I think the best way to do that is with lowest hanging fruit. Now, will it send you on tilt if you opt to close it instead of holding it? You as an individual trader. If the answer to that question is yes, it will throw me on tilt if I closed out here instead of holding it all the way up here, then you do have the propensity, or you should have the propensity to hold it, right? So once you get up here, this is one of the signatures that I actually look for is order flow near an old high, right? Because you close through all of this, and now we're getting a down close candle above an up close candle. And to me, this is one of the signatures that says that price will not return to a discount. All right, so this is just exactly. So she said balanced in a sense. And why? Because we have a down leg and we have an up leg, right? So we've already done all the business that we have to do, and then you've placed order flow here. There are order blocks in which order pairing will occur, and there are order blocks that are just establishing order flow. So, again, you may not have this background of knowledge. This is obviously my discretion that I'm adding here to reading this. This is just to answer Cozy's question, not necessarily the model itself. So I think if it's going to put you on tilt that you didn't hold this, then absolutely you should hold it. Right? And because we're already break even, you have nothing to lose. You've already partialed at 1R. Let me just go back to, let me see if I can, oh no, I don't want to do all that. Let me just pull up the chart. Okay, so we've already trailed our stop to BE. We've already taken partials at 1R. More than likely, we are all taking partials at every time-based level, essentially. And then on this very next candle, we close above TMSO. These are all signatures of very bullish price action. It's moving with speed. It's leaving behind fair value gaps. Again, you have up close candles closing above, down close candles closing above up close candles. These are all signatures and cues that you should hold for sure. And I would just say absolutely, like if you get to TMSO, I actually trail by 2R or by 2 swing lows or 2 order blocks essentially. So for example, if we got up to here and then we just went straight through 3R, then I would automatically trail to 1R. If we go through 4, 5, whatever, at that point I'd be trailing 2R at all times. And that's just if I definitely want to secure profits and I'm not about catching the entire move, right? So if you have been in any of LMT sessions, he's all about averaging up. I think that once you get through like any of these time-based levels, right? So we've closed through, is this previous days? No, that's the same day. Hold on a second. Where's this one from? Oh, this is an old 1034. Hold on, let me delete this just so I'm not confused. Okay, so we've closed through New York Open, we've closed through TMSO, we've closed through 312. These are all cues that you can basically start trailing your stop really, really aggressively. So in short, yes, I do think that this could, if it's an A+ setup, everything happened the way it should have. The 953 is even creating the swing low. These are all things to me as a more, you know, intermediate trader that I would definitely hold this. But I think that some people will hold it and then they'll get nervous here and then they'll be like, oh shoot, I should have closed here, and then they'll maybe even like flip their position. And then we have this inversion like happening here again against us. This would be the next rule that says to close it anyway. And then, you know, like then they would get upset like, oh, I shouldn't have closed it here. So like there's things like that where like any individual trader, they just have to know what's going to send them on tilt. And I am a huge, like, I will absolutely, I literally say this until I'm blue in the face. I've done this on live stream with you all. Like, I'm all about navigating each trader's needs individually, because, you know, what's gonna send me over the edge isn't gonna send you over the edge. To me, it's just like, you never, like, I don't believe in being rude or mean to people, because you kind of just never know what they're going through. It's not because like I don't want to be an asshole and I want everyone to like me. Oh no, like, no, it's not that. I just never know what anyone else is going through in their personal lives, so I don't want to like send them off the edge, right? So like, I'm not gonna force anyone to trade the way I trade. Likewise, you can't force me to trade the way you're gonna trade. Like, I don't give a fuck how you're gonna trade. If this is gonna keep money in my pockets, then I'm gonna keep money in my damn pockets, right? So securing the 2R for me keeps me sane. Exactly, swag. But if like letting this thing run or seeing this thing run is gonna make you start clicking buttons, then hold the damn trade. Don't be scared to hold the trade. And again, we've already removed risk, right? So this is a free trade no matter what. You've taken partials, you've secured profit, so just let that thing run. As I mean, all of you guys will definitely have seen it, but you know, Cozy and I both killed the Thursday range. We held until the end of the day. So that should be like an inspiration to you. And I can only imagine what LMT made that day. I'd be surprised if it wasn't damn near a 100k day for him, if not a 100k day. So yes, this is being recorded, hardcore gamer. All right, so now back to what I was saying before. Cozy's great question. Thank you so much, Cozy. What I would want to see to take a Q3 inversion directly into TMSO is I would want to close over the inversion for sure, but I would want to close through TMSO at the same time. So us closing right above it, we're just about 10 points away. This is one of the things that I learned from the previous Q3 test, is this is not an A+ setup. Even though you have it happening slightly before Q3, we have the entire sweep of liquidity beforehand. And sometimes, yes, it absolutely does work out. What is the data on sometimes? What is the percentage on sometimes? Very low in my opinion, just for the previous back test. And then we're also running into 1034 at the same time. This to me says absolutely do not take it. So we also have midnight here. What I would technically see from this, like a classic Judas, if I'm applying my external knowledge and other experiences. Where is the brush? There it is. From this, we have a consolidated range. A classic Judas actually goes in the right direction first. Then it comes down, probably into midnight, and then up, right? So my A+ Q3 inversion would happen down here. It wouldn't happen up here into there. Like I wouldn't for short against the trend, for lack of better usage. But with that being said, this also kind of has the signatures of a classic Q3 inversion from up here, because you have LR down here. You have the inversion happening. Damn it, Chappie. Damn you. If you watch these videos, damn you. Hold on. Where's the damn... There it is. Oh, I'm gonna have to save this as a different one. Okay, so thank you, Gap Trader. So yeah, like you have LR here, you have the Q3, you have the inverse and the soup happening, not in Q3 but very close to it. Q2 is known for being the manipulation. So this definitely has all the signatures of going lower, and you can absolutely capitalize on this short into midnight, right? But will you close? What happens if it gets to 1034 and it shoots up? Will you have the discipline to close? So for me, the reason I apply bias opposite of what JD does, he just trades every 90-minute cycle for what it gives him. JD can change his mind really quick. He can close trades and enter trades really quick fire. I am not. I cannot. I like to hold a trade, sleep with it, bring my sleeping bag, suffocate it to death. That's so for me, I know my personality, and you also have to know yours. So that's what I wanted to see. That's what I would want to see if I would take this short. This is not presenting that, and within our rules, this is why we have this rule to not short into TMS. So again, I could be wrong. Of course, this is a move that you can capitalize on. All right, so do we have the close here? Looks like we close right on it. So that is, the high is 69.25, 699.25. Our close here is 699.25. So I would actually not consider this an inversion. Why? Because we want it to close, we want it to be unambiguous, so we want it to close above the inversion, above the high of it, not on it. All right, so we would also not take it technically because we're above TMSO. So above TMSO, we are currently only looking for shorts. Okay. this guy here. I want to see if this is going to be 1R into TMSO. It doesn't look like it, but I'm just going to verify. If we use the closest swing high. Oh, wow, that is 1R. Okay. We have one inversion. We have two inversions. The same exact level. And we have a SIBI here. We're above TMSO. It is 1R. It's definitely 1R going into 1034 as well. Alright, yeah, I'm gonna go ahead and take it. 684.75. 684.75. Yep. Yeah. Let's go ahead and take it. Alright. Instant stop out. As soon as that closed above this, I already knew. So Q's here. Oh, it actually didn't hit the CE of this. Oh, okay. So it did hit the CE. What I was referring to is this right here. Once it closed above 50%. Oh, chappy. We'll go EQ. Once it closed 50% of this down leg down, I know immediately I'm getting stopped out. So, okay. I will still track this just because, again, within our rule set, it does apply. And I will not form fit. I refuse to form fit. Yeah, 100%. Agreed. With our more experienced ICTIs. Cozy for sure. But for the average novice trader, just following straight up rules, I think they would take it. Alright, so there's no... Sure, Sure, Gap Trader, can you rephrase that for me? Please explain it to me like I'm 5, let's say. You want me to what? Name out the prices of the inversions, for example, and then of like TMSO, 1034, things like that. When holding on to trades, how do we identify the correct protected higher low for our stop, or should it be BE? So it should be BE after 1R anyway. If JD's rule for trading in general, which I think is a fantastic rule, is that when you are taking profits off the table, you are also removing risk. Yeah, Gap Trader, there's something known as institutional levels. Institutional levels are 0, 0, 20, 50, and 80. These institutional levels, exactly, Cozy. These institutional levels are what's known as, like, they don't want to do hard math, so they just key in whole numbers. I likewise, I actually don't TP at 0.25, 0.50, things like that, right? I TP at whole numbers, so I round up. So for example, the key level on Thursday for much of the group was 22,111 as a whole number. The actual level was 22,111.25. I opted to round up to 22,112 because 220 is a institutional level, right? So I also consider 0s, 2s, 5s, and 8s. Yeah. Exactly. Scary actually DM'd me about this on Friday, actually, so that's funny that you mentioned it. But Scary, aka margin call, yeah, we all if there's confluence there, I definitely think there's just so many things, there's so many variables in what you can what you can call a key level, and so many things you can consider. But definitely those bank levels are institutional levels, right? They're institutions. Sorry, it's easy to go off on a tangent. Let me focus here. NA, it happened in Q3, short 11.25 412. And stop loss is at, sorry, entry was at 11.30, stopped at 11.31. Dealey, did I answer your question all the way? Oh, sorry. Yes. Let me hold on. Let me track it really quick, and then I will answer. Protected highs and lows. I want to get to that. That's important. There are two ways that I look at protected highs and lows, and I will admit that protected highs and lows. I will admit that there's kind of subjectivity to that, because it also again depends on how long you're willing to hold, as well as, are you referring to your entry time frame or your structure time frame, which would be your intermediate time frame, or are you just doing anything to hold towards your daily bias or your targeting TMSO or your daily target. Okay, let me take a screenshot. Okay, my note here will be bullish price action or bullish trend. Okay, so yeah, he scalps the levels, Dealey. So he actually did. I think this is okay to tell everyone. Hopefully it is. Scary or margin call. If you see me if you see this, if you happen to watch this video and you're not okay with this, feel free to let me know and I will take the video down. Basically, he puts all these levels on the chart. If you guys have ever seen him post micro madness within the chat, that's exactly what he's doing. Is he's scalping from level to level, right? And now, with that being said, he has not created a mechanical way to approach the levels for confirmations and invalidations, which is why he approached me with it, because he hasn't come up with a system for that. So I'm gonna go off on a really long tangent here, so if you guys want me to get back to back testing, feel free to let me know. One of the very first things that I learned from ICT, I'll pull up Discord for, TradingView for this one. In the Went series, episode 2, your very first homework assignment is to mark out swing lows, okay, and when you're marking out those swing lows, you are also marking out the highest point within that swing low, right? So of this 3 candle pattern that created the swing low, you're marking out the highest point. So this swing low, technically the highest point is up here, because you have a low with a higher low to the left and a higher low to the right. So this entire swing here is a swing low. Then you would obviously differentiate between the highs and the lows of this. So let's just make the highs bold. And at this point, we're only studying swing lows. I'm not going to mark the swing highs too, because then it's going to get absolutely bananas. In this swing low, this is the highest point. In this swing low, this is the highest point. And in this one, the highest one is the same exact candle. This one, highest point is there. And this one, highest point is there. Okay. So what you will notice, like if I just box these out really quick, shit, this is gonna get really disgusting messy. Let me TOB. Okay. Same. So you'll notice that these levels, oh, I forgot to mark the high of this one. Hold on. Let me grab a line. Okay. You're going to notice that these swing lows revisit other swing lows. Okay. As you like go to do this. So this was effectively ICT's way of teaching support and resistance without like, because it's not necessarily support and resistance the way support and resistance is taught. It's support and resistance of swing highs and swing lows. All right, so when you break through a level, so like for example, we technically did not ever break out of this swing low, or sorry, yeah, this swing low until here, right? So then all this is technically like you can, because if you're using this as a swing high, and I mean we can obviously see we're within this even bigger swing low, right? Or this one here. Okay, so like let's just go back because this adds context. But if I were to mark out this swing low as well, this swing low we break above and we return to it. Notice the inversion right underneath EQ of this swing low, and then we shoot up and we create another swing low, right? And this swing low that we created, we return to 50% of it. Then we break out of this swing low, and look, we miss 50% of it. So when we go up here and we fail this swing high, lo and behold, we come back to the 50% of this swing low, right? And it just happens over and over and over again. So then look, we break through this swing low, the most recent one now. We create a new one on the way, and look, we return to 50% of this swing low again. So the whole concept that I'm trying to get at is that when you are trading levels in general, the support and resistance that you're looking for is very simple. It's if this, then the next level, right? And it's like pretty honestly simple. Like you just, if this then that, if this then that, and what's gonna happen in the middle, who gives a fuck? you're not focused on that. You're not trying to take this. You're just waiting until this happens, until price comes back to this level to take it on trend, basically. That's the whole point of having a bias, is so that your trades are one directional and in the direction of the trend. So I think that was the point that I was trying to make. But basically, that was the very first homework assignment that ICT presents on his channel, actually, aside from the OTE series. The OTE series, you're literally just looking at charts and trying to like guess, oh, where's OTE, right? So the very first homework assignment of studying price on your own is marking out swing highs and swing lows in that manner, and you're marking out the lowest low in that swing low to the highest point within that swing low, and then like the reverse for swing highs, right? So then you're marking out the highest point in the swing highs and the lowest point within that swing high. And it's very easy to see how price bounces back and forth between levels at that point. So that is his way of teaching support and resistance. And it's the same exact thing when you apply it to institutional levels. Like you can go on here and you can just mark out, this is another exercise that he has you do, but you can mark out, I don't have the patience for it, but you just mark out, 800, 500, 200. You mark out 20, 50, 80. And you will start to see on your lower time frames, especially like how price goes up to these levels and bounces away, or trades away from them. The classic support and resistance is you have a level, right? And you get to this level, it acts as support. This level fails, we return to it to retest it. It acts as resistance. It fails. it acts as support, right? And then you trade up. So this is technically like how a key level works for support and resistance. And you know, ICT also teaches that you're gonna bounce from a level in two ways. So you are going to have a run on stops, or you're going to have a return to fair value. So you have a liquidity purge, or you have a failure swing, which is a return to fair value because there's generally a fair value gap within here. So using common sense, my brain tells me, that's not an insult to anyone, this is just how my brain thinks of this. This here is a combination of this here, right? So what I want to see is a higher time frame swing low forming on your lower time frame, right? So I'm not trying to buy this here. I'm not even trying to buy this here. I'm waiting until this happens because I want to see these candles, these higher time frame low with a higher left to the right and a higher left to higher low to the left and higher low to the right forming. So like if this is a 5-minute chart, this is 1 hour, this is another hour, this is another hour. If this here is forming, then that's how I'm looking at a institutional swing low forming, and that's how I'm playing off of these key levels. Whether the key level is swing lows, whether the key level is PD arrays, whether the key levels are institutional levels 0, 0, 50, 80, 100, right? So no matter what I'm looking for in price and in time, right, is that I need a swing low or a swing high to form before I'm fully formed, because the move that I actually want to get is the meat on the bone, quote unquote, right? Like I'm not interested in getting in here necessarily to sit through all this. I just want to be in this, and you know, sometimes I nail it and sometimes I don't, but that is essentially how you play key levels. So regardless of what key levels you're using, that's, you know, that's generally how they trade around these key levels, which is the whole point of that exercise, is to see, is that you get the idea of how we trade around swing lows and like when to consider. Because like, for example, most people are like, oh, this low wasn't taken, now we have low resistance lows. Well, you already traded above the high of that swing low, right? So once you've traded out of the high of that swing low, we ain't going back. So like, for example, this literal swing low that's in front of our face here, this is the low to this high. We've now established order flow above that swing low, breaking through the high, right? So we're out of there. I hope that was not too crazy. So hope that was valuable. Now, with that being said, I want to answer Deely's question really quick. I'll let you guys drop more questions if you guys have them, or comments or concerns. Deely, the way I use protected highs and lows, I actually T-Trades, I did speak with him about protected highs or lows. He literally considers a protected high or low as just a down close candle that has been closed through, or a up close candle that has been closed through, right? Because at that point, this is order flow. So either order pairing is going to occur there, or order flow should be held from that point. So if we are trading like this here, just thank you, Cozy. Hope that made you proud as one of the better ICT students that I know. So if we have this candle here and we closed above this candle right there, we should not return to the low of this candle. We definitely actually should not return to the body technically. But once that low, the body low, I mean, which will always be the close. But once you've closed above that low should be protected. So from this point, this is where you would be trailing your stops to the low of this down close candle. Now, if you have seen SBS, I could be wrong, I haven't studied this in depth here, but you effectively have a swing high, You break that swing high. This is 1, the market structure shift. Then you create a swing low, which is the pullback. That's 2. Then you have 3, another break of structure. And then you come down and you stop out 2. And you have this, right? This is actually, yeah, I am too, but it's actually, you'll see how this all comes together. I think hopefully I can convey this in the right way. So we have 1 break of structure, and I'm not, again, like, I'm not trying to teach SBS here. I just want to show you how this all comes together, right? So 2, I'm not a mentor, for the record. I don't call myself a mentor. I don't want to be a mentor. I look at myself as another student. So, you know, if I'm wrong and you want to correct me, I can take it. So we have 4, 5. Pretty sure that this is what it is, right? So swing, break, sequence is what SBS stands for, I'm pretty sure. This right here, let me use a different pattern. Where is it? Adonde. Okay, let me just use the brush. All right, so this right here is what people call a failed 2022 model. Because their dumbasses entered here for the 2022 model, right? At no key level. There's nothing happening up here, right? They just decided, oh, I see this pattern. I see this. Oops. Yeah, swing break sequence. So like, they just see this, right? And they think it's the 2022 model everywhere it is, but you have to add context to that. You have to add bias and levels and things like that, right? So there's a whole storyline because it's a smart money reversal, and the smart money reversal requires SMT. So with that being said, Dealey, back to my point, is that generally speaking, there is SMT with a protected low as well. So when this is happening right here on your other asset, this is not happening usually, right? And I usually, when I say usually here, I mean like 98% of the time there is going to be SMT in this area. Oops, I'm not doing this right today. Hold on. Yes, 1 second. So either way, this right here, where people call this the failed 2022, when this failed market structure shift occurs, I'm waiting for an inversion to occur down here, right? And what you'll notice is like this is maybe happening on your 5-minute chart, but here this is an order block on your 1-hour chart. So when you're using protected lows, it actually should not be on your entry chart. It should be on your structure chart, which should be your intermediate term time frame. So the time frame alignment I like to use is 5-minute, 5-minute, 1 hour daily, right? Very simple. I think that's not too hard to demand. So daily is where I'm getting my bias. If we closed above the previous day's high, I'm aiming for the next previous day's high. If once I have my bias determined, I'm looking for structure. So I am not looking to buy a down close candle on the 1 hour. I'm not looking to buy until we have a green candle on the 1 hour, right? Because again, I'm looking to get in here. I'm not looking to get in here, just because you never know how far it's going to go. Like, you have to really be good at picking your key levels, essentially. And then for the 5-minute, I'm waiting for my entry. Now, I'm going to blow your mind with this, I think. But the way I learned bias from ICT, Mastering High Probability Scalping Series. Okay. Oh, deleted the wrong one. Okay, let me just delete everything then. The way I learned bias from ICT, the man himself, is on the daily chart. When you have a swing high that gets broken. You are waiting for a swing low to form. Once this swing low forms, then you are waiting, or sorry, then you're waiting for the third candle, one of the candles to be broken. It's pretty sure it's the third candle, or it doesn't matter which candle, because sometimes, you know, depending on how the candles are outlined. Once that swing high is broken, then you are just taking every single candle after that. So you have to, let me just go over to candles here so that you guys don't get confused. So we have this swing high being broken here. Okay, no, sorry, wrong swing high. We have this swing high being broken here. We are waiting now for a swing low to occur. Once we close over the third candle, you are now bullish, right? So for this candle, we have no bias. This candle, no bias. This candle, no bias. Notice we are also not closing below. This is the first candle here that closes below the previous day's candle, because we closed down here. But notice that we did not close below this actual swing low, right? Again, referring to the previous lesson that we just went over. So we don't actually get a close above our previous day's high up until this day right here. So this entire like week would have just been like very lower time frame scalping. I wouldn't use the daily as my bias at that point. I would switch down into a 4, 15, 1 minute time frame alignment and go by 15-minute structure using my 4 hour as the bias, right? So once we get this and we close above here, every day after that, I'm looking to close through previous day high, which it does, right? And that is when you can expect this trend day to occur, is after you've had this swing low form, right? And you'll see it over and over again. So for example, here, this is the technical swing high, because we have that up close candle. We don't actually close above it until this point. Once we close above this candle here, on this day, the next day I'm looking to close above swing high, and we do. The next day, the same thing. So that swing break sequence that's occurring there, when you have your swing high, you have your market structure break, and then you have that low form, and then you have another break of structure occur, and we return down here to break this low here, and then we have this swing high form again, and then we go up, right? This to me, based on what I've learned on bias, is, hold on, getting a message. Okay, so this here, what I've learned on bias, I would only be capitalizing on this move here, right? Like, because we finally got the break of structure here. Once we break a swing high, we're waiting for a swing low, so I would execute on this. Once we break this swing low, most of the time, I don't have an average on most, but once we break this swing low, I would have to see a swing high form and break the low, right? And that does not happen here. We're not looking for this low to break if we're trading opposite of that. So this failed 2022 model doesn't actually ever fail because it's the wrong context. If I'm biased, if my bias is bullish, I'm waiting for a swing low to form, right? And then once we break through that swing high again, I am executing on this move right here. So Mastering High Probability Scalping series, I highly recommend that you watch it. It's basically the model in that is you take midnight open to previous day high every single day, and you use if you pair core content month 8 with Mastering High Probability Scalping series, you should be printing money out the ass, period. Because in core content month 8, you have the tools that you need to pinpoint high and low of day. You should know where your protraction should come from as far as your manipulation, either in London or New York. and then you know how far that trend day should take you. And if you execute that based on bias that you learned in mastering high probability scalpings, you are only trading the trend days. You're not trading the swing highs and the swing lows. And that way you never get caught in a reversal day, because that's what the swing high and swing low is, right? It's a reversal. So if you only take trades on those days, you would obviously take significantly less trades. But then you can, if you want to take more trades, then you change your time frames. So I go by daily bias, you can go by 4-hour bias, you can go by 1 hour. And the way that T-Trades teaches daily bias is very much aligned with that mastering high probability scalping series, because that's the entire concept. Is every single day that you close above the previous day's candle, you are just still targeting the next previous day's candle. Now, after, there's another rule that ICT has, but after you have 2 to 3 expansion days, right, you're no longer expecting more expansion. You're now waiting. And plus, you know, like if you're only trading, if let's say you follow every ICT rule, you're not trading on Monday unless it's a red folder NFP week, and Monday is the only day with news. So you're not trading Monday. You're capitalizing on the move from Tuesday, Wednesday to Thursday, and you're likely not trading Fridays because the range has been exhausted by Thursday morning, right? Yeah, exactly. That's a really good indicator, Cozy. Thank you for mentioning that. But it's very simple. You close over previous candle, then you're aiming for the next previous high, right? And you can see that very simple. If you haven't done that back test, we should actually do that right now, to be honest with you. But if you haven't done that back test, that, I swear to you, the very first time I tried it was an 86% win rate. Just targeting previous day high and low, right? So imagine if you can say, okay, I'm gonna enter at midnight, and because I project that this is going to be the area of my possible high or low of day, then you adjust your risk accordingly. If you only have $250 that you can risk, but it's going to be, I don't know, like a 70-point stock, then you don't risk more than 1 micro, period, right? And then that way you can capitalize on the entire move. You can get the experience of holding a trade, and you can be a part of these larger moves, and eventually as your account size grows, you can start to size up. So if you haven't done that simple bias back test, I would highly recommend that you do that. I'm gonna go now to see, oh sorry, Dealy, one more thing. Once you close above that swing high or swing low, again, you're using your middle time frame, right? So you wouldn't be doing it from your execution time frame. You would be watching your middle time frame to see. So like, Dealy, am I right in assuming that you trade the Q3 reversal, or that you trade the 1 minute time frame, let's just say? Okay, so since you trade the 1 minute time frame, let's say that I use 1 minute, 5 minute, 15 minute when trading the 1 minute time frame, because I'm looking for a low resistance move only. So a 1, 5, 15 minute alignment would be for when the algo is in OTE mode, right? It's not in consolidation mode, which is what I think a market maker buy and sell model is, just according to my own understanding, right? So this is consolidation, this is expansion. So when it's an expansion, I'm using OTE time frame alignment instead of market maker time frame alignment. OTE time frame alignment would be the next time frame up. So let's just really quick, I don't want to spend a crazy amount of time on this, but let's say from your entry time frame is 5 minute. Let's say theoretically we got down here. We want every swing low to hold effectively, right? So we want the lowest down close candle to hold. That's what I'm just gonna mark out here. And it should follow on this time frame. Hold on. Day, same contract, yes. This is Friday 6:50. It's not showing why. Dude, TradingView is broken today. What's happening? Okay, so what I'm trying to get at is that you mark your swing lows on this. Okay, there it is. You mark your swing lows on this, and I'm just gonna mark the lowest down close candle, right? So we have yet to visit this one. So let's just say you're trailing your stop. Let's pretend you're trailing your stop on the 1 minute. So watch the 1 minute as I, mark these out here. So you're trailing your stop according to the 5 minute swing lows, not the 1 minute swing lows. Because if you trail it according to the 1 minute swing lows, you're gonna get your ass handed to you. But if you do it according to your structure time frame, it will hold. So let me bring you forward in this one. Look at that, it holds. So that is how I look at protected highs and lows. Also, a protected high and low is when you have SMT at those swing highs and swing lows. If you haven't studied SMT, then it's just it's basically exactly, I can't use this example enough really, but when you have a breaker on one and you have a failure swing on the other, right? So these are both institutional swing points. This is what we're looking for at every single pivot and turn. So when price generally comes up and we're waiting for that liquidity sweep, on the other asset that we're not referring to, there is this happening, right? And when this happens to us, we're like, oh no, it really didn't take the high. I didn't take the trade because it didn't take the high. You're supposed to take the trade that didn't take the high. Actually, people view the exactly above the stop above or below the swing with the SMT. So like as you go through these protected lows, for example, you can also refer to your other asset to see if there was SMT here, and then you can opt to only use the swing lows that had the SMT, for example, building on what Cozy just commented. So when you have an SMT at the highs, right, you are, first of all, the context is that you're overall bearish. You're not looking at SMT at the highs if you're overall bullish. You're only looking at SMT at the highs if you're overall bearish. Once you are overall bearish, you're waiting for SMT at the highs, and the one that failed to take the high is the weaker asset, and you sell the weaker asset. You don't sell the stronger asset, technically. Now, obviously, we are all assholes and we just trade NQ regardless of whatever, right? So, but the technical rule is that you're supposed to sell the weaker asset. Now, let's reverse that, right? So, when we are overall bullish, being the context of our trading, when we are overall bullish, then we are selling the asset that doesn't take the low, because that is the stronger asset, which is pretty much always NQ in this case. So like the other day, for example, yesterday when T was reading price action into 350, and right into 350 he goes, oh no, ES is absolutely collapsing. Same for YM, it was absolutely collapsing, right? And NQ was bullish as hell. NQ was in fact the asset that we were buying at that point, right? So that's an exact instance in which like we're buying the stronger asset. Okay, so I think I missed a bunch of questions. It says I have 32 new messages. Let me just double check that I didn't miss anything. Oh, 2022 model with OTE. So I think I touched up on that gap trader. That's actually pretty, like, here, let me I just want to confirm that this is kind of like the god of all examples here. 1 second. Sources. Okay, this is from a T-Trades video. Let me see what video it's from. I honestly think it's from like A+ setup video. Let me see if I can copy and paste this, or if it's too big. Okay, there we go. So here, this is all an iteration of the 2022 model, really, right? But it's whatever iteration you want to use. You're either looking for the fair value gap, or you're looking for the order block, or you're using premium and discount, or you're using OTE, or you're using the box setup, or you're using a breaker block. And I would say like 90% of traders are combining all 6 of these, right? And probably with the exception of the box setup, right? Because that comes from another discipline. But most of us are probably all looking for the same thing. The unicorn is the breaker and the fair value gap together, right? Personally, what I'm looking for is I'm looking for an inverse fair value gap, a fair value gap, and any block. So it can be either an order block or it can be the breaker block. If the order block is cleaner, I'll use the order block. If the breaker block is more obvious, then I will use the breaker block. So, and then in all of that, when you're returning to discount, that is more than likely hitting OTE. So I think that should answer it. I don't think I missed anything. Great, awesome, Cozy, sweet. I'm glad that you think so. All right, does anyone want to insult me? Does anyone have questions, concerns, comments about any of that? Did I answer everyone's questions in regard to any of this? Does anyone want to say I'm wrong? Does, anything? I'm open. Does anyone want to tell me I haven't studied enough? I do. Let me get that from my journal. I just like to present the opportunity in case. Because, honestly, I think I'm a baby in trading. I'm not a millionaire yet. I am a millionaire net worth wise. Soy, for the record. Net worth, I own my house and both of my parents' houses. So net worth, but who's going by net worth? I'm talking about a million liquid. No, I don't have a million liquid. I'm not a millionaire. I actually went super freaking poor when I was becoming a trader. I'm gonna show, wait, no, I won't show you. I'll send another screenshot at another time. I will show you guys that I was late on my mortgage for 14 months in a row. Thank you so much. Hopefully, God willing. All right, for month 8, core concepts, core content, went series, and high probability scalpings. Do we watch in any order? I would highly suggest that the very first thing you watch is probably the went series. I will be honest though, it is a very hard series to get through if you don't have the attention span. If you don't have a high tolerance for ICT, just go study T-trades, with all due respect, right? Like, it's not, I don't even think it's like an insult to ICT, right? Like, every turn, T-trades shows respect to ICT. So I think it's very much within reality and the realm of what we're doing. So like, just go study T-trades. If you can tolerate ICT and you can make it through the rants and you don't mind spending hours watching him, then watch core content. You would watch went series first, then high probability scalping series, and then core content. If you go to, I don't think those were the actual three the 3 things that I used neither. So hold on, I listed one time. It actually might be under my highlights. 1 second. All right, so let me way down probably. There we go. It's these 3 series that I think is the like ICT Bible, essentially. Scout Sniper and Mastering High Probability Scalping, right? Scout Sniper is another one that's kind of like brutal to get through, but it is one of those lessons that are actually very structured. Market Maker Primer course, hands down, gotta do it. Mastering High Probability Scalping is one of the easier series. This is like 4 videos total. The first video is just an intro. You can probably skip it. The 3 videos are like, maybe they're all less than 2 hours, I believe. I could be wrong, but I'll just pull it up really quick. Yeah, so, oh, dude, less than an hour. Yeah, so this is a really, 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 if you just, I would focus, you know, like on length, obviously. Like if you can't stand ICT for that long, by all means, don't watch it. The When series is a little bit longer. It's a lot longer than all of those. So I think that this is what you should study, but I would study them in order of date, which When series is the oldest, and then High Probability Scalping, and then Core Concept Month 8. Now, if you, like, what is the T-Trades equivalent of on ICT? Like, from ICT directly, you mean, PG3? Ooh. Of these 3 series, I would say Market Maker Primer course is probably going to be the T-Trades equivalent, because he goes over everything. This is all pretty short too. Yeah, you guys just gotta suck it up. You're gonna have to suck it up and watch it. I would say that this is you for real, because this is just like, you can. Alright, look, I'm gonna tell you guys. I used to watch ICT while I was working out. I used to watch ICT while I was trading. I used to watch ICT while I was backtesting. So, like, you can listen to him in the background, right? There's gonna be a lot of stop and pausing and taking notes and like, holy shit, this gem, right? But you better just get through it. Like, I watch him a lot while I'm working out. Like, legit, I will just throw him on. Like, if you're cleaning the house, if you're doing something like mindless, go ahead and throw some ICT on. Granted, there will be some times where he pisses you off because I spent like the first year of listening to ICT yelling at the screen like, what the hell are you talking about? What does that mean? what does that mean? Yeah, exactly. Yeah, I you know, as a beloved ICT student myself, I have taken a break from him from time to time. There are times where, like, when I play him again, I'm like, holy shit, why haven't I listened to everything that he's put out, right? So there are definitely gems there, but you just gotta you gotta get through some of it. Yeah. Another thing too though is, like, in these series, he's very structured in getting to the point. Like, when you get to a video that's like 4 hours long, you know he's ranting in this damn video, right? So just skip the video. Like, but there's a lot. Yeah, exactly. So I actually said this to ICT directly, is that so what he said was, or what Cozy said was, there's a part where he says he tucks the gems in deep so the weak won't make it. So I've actually said this to ICT directly, either in a space or something. But he is literally talking the way the market moves. So he's letting us consolidate. He's just talking and talking, and we're like, get to the damn point already. Then his gems will be like, boop, boop, boop. And then it's just like, holy smokes. This is like, what is he like? I've never heard this before, right? And he literally talks like that. That's why, like, you'll notice, there's a whole lot of theory and conjecture in this, but like, they're like, oh, look at the length of his videos. This is all according to his logo, and there's all a reason behind this, right? Like, yeah, 100% AMD speech structure. But he does, like, he's building patience in just teaching you, because that's what the market is all about. You have to wait for your trade to come to you. You're not forcing anyone else's model on yourself. You're not forcing any of the concepts on yourself. If a concept speaks to you, then you just, like, you go with that, and you wait until it lands in your lap, and it's just so hard to ignore, right? It's that cat that finally walked up to you after you chased it around the house the entire time trying to pet it. It finally just climbed up into your lap and let you pet it, right? And that's essentially what trading is. And he puts us through the ringer to get to that. Okay, that was a really, really long rant. Any other questions? I think we're done backtesting. Because that was like a huge rant there. We only got 2 reps in, guys. Yeah, I'm sorry. We kind of have all of that same characteristic as his student. when you are entering the trade, are you 100% sure that is the exact model, or are you never really sure? I'm 100% sure, absolutely, me as a trader, that it is the model, because I'm applying everything else that comes before that, right? So I'm applying the context. Like if we just go back to the 2 reps that we just went over, and thank you so much, guys. I appreciate all the support here. So in, for example, yes, this is great. Thank you, Cozy. So if you're applying, for example, here in this rep down here that we took, I'll pull it back up as the A+ setup. So here, because we were underneath TMSO, we are only looking for a bullish inversion, right? We are only taking a trade after the Q3 candle has printed, and we're only taking inversions in which we completely close above the high, not on the high, right? So this has all the makings of everything that we're looking for. This meets all of the criteria to take the trade, and our target was well above 1R, okay? So in this instance, this one example, I know that it is 100% the model because I followed every single rule of the model. Chance pinger. So that goes to say that you, whatever your model is, it needs to have all the context around it, all the rules around it. And if you don't have any of that, then you just pull it out of thin air and you test it, just like I have been showing you guys how to do. You just put all these rules together, and then you say, okay, I'm gonna test this for what it is, right? Like, I don't know if this is actually gonna work. This is what I think I've been observing. This is what I've seen in the past. This is what I saw JD do. This is what I saw Cozy do. This is what I saw Jess do, and I'm gonna try it for X amount of reps and see what probability that presents me. And for me personally, as a trader, if it meets 60% probability or higher, I'm keeping it. It's part of my thing. Yes, this was all recorded, Darius. So like, I'm just gonna share, I've shared it with you guys before, I will share it again. This is my trading plan. This is exactly what I trade every single day. You can take a screenshot of it now. Again, I've shared it with you guys multiple times. I will upload it here. I have rules in which I follow, right? This is all, look at this. This is all required before I can even trade, okay? I have to work out. I have to drink water. I have to meditate. Literally, meditation can just be like taking a breath of silence for 2 minutes, right? I write my values, so I have to remind myself why the hell I'm doing this, what this is, you know, what I'm doing with my life. For me, my goal has always been to be financially free before I have kids, right? So like, no matter what, that's top of the list. Like, before anything else, before paying my bills and all that, like buying myself another BMW and things like that. Like, my goal is wholeheartedly to be financially free before I have kids. And then I have to be thankful for all of the progress I've made so far. And then I'm reading this trade plan to myself out loud every day. Okay. Now, this is honestly, for this has now become very much more broad because I am a little bit more experienced now. So this may not be specific enough for you guys. You can use this as a format and you can make it more specific as far as your entry criteria, right? Again, like, I'm literally trying to enter at a turtle soup or a 2022 model. I don't even enter at the 2020 at the turtle soup anymore. Like, that's pretty much gone. But I am waiting for a 1 hour array, and I want the 4 hour and the 1 hour to align. And I'm looking for all of this to occur at session, daily, weekly, or monthly highs and lows. I'm not looking for it in the middle of a session, in the middle of Asia sessions price action. I'm not looking for it in the middle of London's price action. I'm waiting for it to occur specifically at the highs or lows, right? And then this is where I get really, really specific, because sure, I can enter a fat trade. I can enter like nobody's business, but can I exit? Hell no, right? So for me, it's all, my bread and butter is within the risk management. It's how am I cozy. It's all about closing the trade, because we don't make money until we close the trade. We don't make money with entries. Sorry to say, right? So you have to close that trade at some point. And when you close that trade, that is when you have successfully made money. So this is where my weakness is. So this is where I got really, really deep into it. Otherwise, this is, you know, this is a very broad entry criteria. So you can use this as a foundation for your own trading plan. Maybe we will do even a whole lesson on creating a trading plan that is working for you. But in order for that trading plan to even come to life, you will have to have some sort of model that you more or less back tested at some point. So yeah, Cozy, if you, I mean, sorry, Gap Trader, if you join every Saturday, I say it every Saturday pretty much. But yeah, you gotta exit. Okay, I gotta mention in premium chat, I'm gonna go double check that really quick. Oh, it's just Angel. Alright, so any more questions, comments, concerns? We definitely will wrap it up here. I think the video now is about an hour and a half long, so I don't want to keep it too long. But you know, again, if you guys have questions, I can also just cut the recording and we can keep talking. In fact, that's what I'll do. I'll cut it and we can keep talking.